Why do we care about the repo market? Break that down for us.
Well, I think that, one of the things is the repo market is really a important part of the plumbing of the financial system. It's the cost of capital, right? And it's really important in terms of the health of the economy, the credit markets, corporations. And I think it's been ignored for quite some time because it's been so sanguine in volatility. So something good did come out of the September volatility, which is people took notice.
So how does that set us up going forward? You said that this could create some risks going into 2020.
Yeah, I mean, I think that, with the Fed getting as involved as it has. I mean, first it started off with temporary open market operations, which, by the way, it did even pre-crisis. And that was to make sure that the Fed funds rate went within the band, which is now that 150 to 175, in order to them officially conduct monetary policy. But you still have a supply-demand imbalance. We have almost $1 trillion deficit. We have a lot of treasuries that they're issuing to pay for that deficit. And the primary buyer of that are primary dealers. And they've had, obviously, some financial constraints since the crisis. So going forward, I think it's going to have this heightened concern, over quarter end and over the fact that, to make sure that these leverage accounts, if you will, don't have to unwind their positions.
Right now, over the last few years during the Trump administration, the Federal Reserve has become more politicized, whether they want to or not. Is that going to affect what they may do in terms of repo rates next year going into an election, or business as usual?
I don't think so. I mean, in the end of the day, I mean, we did a piece called Contained Volatility. And I think one of the reasons why it was contained is because the economy is doing so well, right? You have a 50-year low in unemployment. You have financial conditions that are loose. Both fixed income and equity have had a great year. So I don't think that that's really going to have any influence. I do believe that the Fed has more of a watchful eye on really what the appropriate levels of reserves are, because they may have misjudged early on, but I don't think it's going to have anything to do with the election.
Let's talk a little bit about the macro environment. Heading into 2020, it feels like those recession fears have faded away. At least a lot of the analysts that are coming on air, a lot of Wall Street, is talking about, single-digit gains for the S&P 500, a good macro environment. But last night, it was interesting. We got a letter that Huawei, one of the biggest Chinese private companies, sent to his employees last night. The chairman sent saying that next year would actually be very difficult, and that they had to sort of persevere. Do you think that perhaps markets are underestimating the China-U.S. tensions, the trade war, because we have this phase one deal, but we're we don't know what a phase two is going to look like. We don't know what's going to happen next year.
Yeah, I think you're absolutely right. I think market sentiment has definitely become a little bit more positive since this phase one deal, but I don't think it underestimates the amount of volatility that we can see in 2020 from, what the trade bill might have or how further it could go. I mean, obviously, I think a lot of the sentiment has shifted towards trade, towards election heading into 2020, but I think you're absolutely right. I think there's a bit of definitely not complacency, but the market sentiment has shifted a bit more positive since this phase one deal has been announced.
Is that complacency? When you also look at Europe, right? We've had sort of Boris Johnson win the election, and it looks like Brexit is going to be pushed through. So do you think that there's any events that could maybe flare up next year?
I think that given what we saw this year between the tweets and the headline risk that, went back and forth, I think that's a variable that investors definitely don't take for granted. And they know how to deal with it better now because they've had it for quite some time this past year. But I don't think that people are just going to sit back and ignore things, the geopolitical or political risk that's going to happen in 2020. I think it might have shifted in terms of, what will really be the driver. But I don't think they're not complacent, or they're going to just assume that everything is going to be fine with the trade deal going forward.
Right. Any black swan events that you foresee, something that?
Look, I think the biggest risk could be for next year. I mean, that people might slightly be underestimating is obviously inflation. I mean, we know that everyone is betting, and we believe this as well, the consumer's quite strong if they should fall below expectation. But I think inflation will be one of the issues that people need to concern out, or if, not that we feel this way, if you have a large rise in interest rates that, the market is not anticipating, or investors aren't anticipating.